Sure, you're worried about your job and you have that sinking feeling caused by your balances in your retirement account getting lower and lower. I mean, there's a bunch of negative consequences of a recession, but an economic downturn, it's not the end of the world. In fact, recessions are inevitable and necessary. History has shown that when it comes to financial markets, what goes down comes back up. It might be a little rough coming back up, though. While it might seem counterintuitive, recessions aren't all bad news. From the chance to earn higher yields on your savings accounts to the potential of bargains and low cost dividends in the stock market. The clouds that are over the economy during a recession do, in fact, have a silver lining. Let's talk about some of these. So, the first thing we want to talk about is the correcting of the market imbalances. Now, a recession resulting from an economic imbalance may rectify it, clearing the way for a return to growth. As an example, the 1981-1982 recession was triggered by the Federal Reserve interest rate increase in response to high inflation. Now, it helped to lower the inflation rate from 11% in June of 1979 to 5% by October 1982, and the U.S. economy grew for the next 8 years. Now, similarly, a recession can end the misallocation of investment capital, whether fueled by a housing bubble or a dot-com bubble. Now, the process can be painful, and recessions may be instrumental in bringing the markets back down to earth, setting the stage for an eventual recovery, and renewing the foundations for economic growth. Another silver lining is going to be those savings. The early phases of an economic downturn often coincide with increases in interest rates as the Federal Reserve pulls the levels of monetary policy in an attempt to combat that inflation. So let's look at 2022. The Fed engaged in a series of 75 basis point interest rate hikes, lifting the federal funds rate to a range of 3.75 to 4% at its meeting in November. Now, while rate hikes have, like a cooling effect on the economy, there's a bright side, as the higher rates translate to higher yields on deposits and savings accounts. While other assets, they may or may not be subject to heightened levels of risk as the economy tumbles, savings accounts benefits from the higher interest rates during the early stages of a recession. Now, this is going to provide small but stable returns. Now, savings vehicles like certificates of deposit or CDs and money market accounts, they may offer even higher rates than traditional accounts, and online accounts often have the best terms, so make sure you're shopping around. The advantages of higher savings account rates make this stage of the economic cycle a perfect time to focus on beefing up that emergency fund. This way, if you lose your job or suffer another, economic setback during the recession, you're going to have that little cushion of cash that you can help get through that difficult time. And even better, you can use the cash to accumulate in your savings account to allocate to other investments as the economy begins to recover. But while it's recovering, it's going to be a good thing we get to look out for. Those bargains, right? Because the recession is stressful, but it can be distressing to watch your portfolio just lose in value over and over. Just the economy dives, your stuff dives. Now, this is especially true for retirees or those nearing retirement who don't have the luxury of time to recover from investment losses. However, unsettling as it might be to see all that red ink on your account statement, it's important to avoid overreacting and selling your assets at their recession lows. In fact, if you have the patience and are able to adopt a long-term perspective, a recession can be a good time to hunt for bargains and purchase undervalued assets. In addition to identifying stocks of resilient companies that may have suffered overblown declines, investors who continue to buy through a recession stand to benefit from lowering the average cost paid for their assets. As an example, if a stock you own has lost value during a recession but you remain in favor of that company's outlook, you could buy more shares at a reduced price. This will bring down the overall cost per share that you paid for your position, making it easier for you to break even and setting you up for even more gains when the stock recovers. Now, declining stock prices during a recession also have the potential to benefit investors seeking income from dividends. As the price of a stock decreases, its dividend yield increases, generating higher returns for shareholders. However, the perks of increased dividend yield come to fruition only if the company maintains its dividend. despite the recession's potential negative impacts on its business. And while such due diligence is important anytime you're researching a dividend paying stock, it's really critical during a recession to seek companies with a history of stable payouts and the capacity to weather the recession. Then, another thing that we're going to get from this is the foreshadowing of lower interest rates, right? We care about those interest rates because, in contrast with the interest rate hikes that often accompany the beginning of a recession, in the later stages, policymakers lower rates. That way, they can jumpstart the economy. Now, there's vehicles like savings accounts. They're going to lose a lot of their appeal they generated earlier in the downturn. And there are other advantages to prospects of lower interest rates, on the horizon. But as an instance, a lower Fed's fund rate translates to lower mortgage rates. The favorable borrowing environment during the later stages of a recession could provide an excellent opportunity for homebuyers. So at the end of the day, can you benefit from a recession? Well, by their nature, recessions have far-reaching consequences with negative effects just in multiple areas of financial markets. Although it's impractical to expect to reap a financial reward from a struggling economy, recessions have a couple silver linings. Heightened interest rates at the beginning is going to allow you to earn more on your savings. Lower interest rates moving out of the recession makes it easier for you to get loans, and you might be able to buy stuff at a discounted price. Okay, well, how do you manage your portfolio? Well, if you have a longer investment horizon that's going to give your assets time to recover from any losses during the recession, you're going to benefit from maintaining your existing asset allocation, remaining invested in the markets and poised to gain from an eventual recovery. However, there are ways that you can reduce your portfolio's risk in response to an economic downturn. Riskier assets like stocks and high-yield bonds tend to lose value in a recession, while assets that are seen as more stable like gold and U.S. Treasuries tend to appreciate. Within the stock market, shares of large companies with solid cash flows and dividends tend to outperform in downturns, so we need to keep an eye on those. So what does this all mean for you? Well, just remember, recessions are natural and unavoidable stage of the economic cycle that they're gonna bring hardships to individuals who lose their jobs or businesses. It's just unfortunate. But economic downturns, can also be a difficult time for investors, especially people nearing retirement who can't afford to, have all those losses in their portfolios. And for those with the flexibility to adopt a long-term perspective, you got all these silver linings. So it's difficult, if not impossible, to time the market. But, depressed assets prices during recession, could offer buying opportunities for investors, shifting in interest rate hikes throughout the course of an economic downturn. These are going to provide advantages, higher rates aimed at fighting inflation for savings deposits, lower interest rates to spur the economy, out to recover. So you're going to be able to buy more stuff. They don't make up for the economic pain that you go through, but these bright spots might be able to help you. So, just think of the positive. It's going to be rough, but just think of the positive. And at the end of the day, just do what you got to do to take care of yourself. Do your research. Put your money where you think is best for you. Right? Everyone's different. But I hope you guys have a good day. I hope you liked this video. If you did, subscribe to the channel. Hit the thumbs up button. And I'm glad you guys listened to the end. But, till I'll see you guys in the next one. Y'all be safe.